guys, in today's video it's all about the third day surge setup. I've seen at least 4 this week. One of them I took for a 23% gain, so we're going to go into the trade that I took and the ones that I didn't and why. Let's go to the chart. So we'll start off with the ticker that I traded for a 23% gain, which was SKYQ on a third day surge setup. So this is the daily chart over here, and if we look back we can see that it's had a previous split in March 16 and then they pumped it and it had a run here. I did high volume as well, 206 million volume, and then went up to highs of $20, so massive run, which is what gave me less conviction in this trade. I did still take it obviously, but it's not ideal when it's had a recent big run. But here's the most recent run it had then in June. So it's done 221 million volume, so massive volume, and it's gone from around the 117s up to highs of 235. And it wasn't particularly a strong day one. I think it only closed up about 60%. So again, kind of want these to be stronger day one, to be like A+ setups in my opinion. But then we have a really nice drop off in volume on day 2 and a nice retracement. And if we go on to the intraday, you can see how the chart sets up as well, really nice. So this is its day 1 retracement and this lovely basing action here, matching this nice little area of support here. So we've got support in the 150s, so you've got that $0.50 mark as well. And then after hours it's holding up nicely, and pre-market the next day it's kind of got this nice little base here, which I can't put too much emphasis on pre-market because, you know, it's not very liquid here, and yeah, is what it is, but it is a nice little base there, and it's hovering around the red-green area, which is the day 2 close, and it's holding well above the previous day's low of day as well. So this is definitely something I want to trade. Took an initial entry. I always hate this red-green area because I know it's going to be choppy, and I've always put my risk probably too tight, but I'm all right with that. So entered originally at 165, I think somewhere around here, when it pushed above red green, cut, re-entered at 164, and then just risking off like 162 I think it was after that. That's why I cut originally, because it hit that level. Kept my risk level at 162, or maybe at 161, can't remember exactly. And then probably should have been 159, maybe I did put it at 159, I can't remember. Just under this little base, under the 160 mark. Not actually sure what I risked off, but it was a tight risk either way. And then can see market opened and it did the nice move upwards and sold out way too soon on this, and I was thinking this could potentially break out, but it was just that previous run that it had in where was it, did I say? Yeah, April, that gave me less conviction on this and made me sell out way too early. So yeah, as I said, I took a 23% gain on this. I think I did get a sell somewhere up here maybe. Yeah, I did, I think. And then yeah, I can see the following days it's pushing for that breakout level. Let's see, so it wants to break out of here, and then it just continues up, and it's still going at the moment. So yeah, it would have been a nice one to swing, but it's just not my comfort level swinging, especially on third day surges. I just want to be in and out. So yeah, nice little trade there. I'll go on to the next one we saw this week, which was HSCS. So just get rid of that. Again, daily chart here, big day 1, drop in volume day 2, and you got the surge on day 3 on the daily here. Let me go into where I took this. So yeah, this is its day 1, and then I was quite interested in this area, this key area of support here, which it's bounced off pre-market on its day 1 twice, 3 times, 4, 5 times. That's a very key area there. You can see it breaks it a little bit on its day 2 pre-market, reclaims it, breaks it again, on day 2, and then it wants to hold well above that on, well, just above that on day 3. So I really like that area to be able to risk off. However, I think I waited till market open on this one. Yes, I did. Because it's just not got enough action there. So I took it on market open. I got in at 263. So literally on market open, just risking off the red green area, really tight risk, but I can always re-enter if it cuts. So yeah, with this one, I took a tiny gain because I was pushing for more. So like with SKYQ, where I sold out way too soon, I was expecting much more of a move on this one, which it didn't do. Like, I think maybe it was like a 17%, something like that I could have taken, but that's just not the move in my opinion for a third day surge, and then got stopped out on this candle. So yeah, it's not great. But also, if we do look on the daily chart on day 1, you can see it really lost a lot of its gains. So it went up to highs of 375 and pushed all the way back down. So again, that's ideally, you'd kind of want it to hold closer to its high of day. But saying that, it's kind of still continuing its move a little bit. But yeah, it's not the nicest third day surge that I've seen. It didn't play out the way that I would want to see it. So they're the two that I actually took. So, you know, that's fine. And then SCUV was another third day surge that we saw this week. And yeah, you can see day 1 here. Day 2 closed higher than day 1, and then a big surge on day 3. So this was definitely on my watch list. It has done quite a few splits. I do tend to make little notes on the charts sometimes just to remind myself like the negatives of a trade. So yeah, it's done a split in January 25, a split in February 26, and then another one in June 26. So ideally I don't want to see like so many splits close together, but the setup was there. So on the intraday, you can see day 1 here, pull back on day 2, drop in volume, and then day 3 you've got this massive surge pre-market. So yeah, I was watching this, it was on my watch list for this day, but by the time I'm looking to trade it, it's already had this move, and I'm not going to be trading it at this time. So I'm fine to miss that one, but good to see that they're in play this week. And then the final one, which was on my radar, which again, not really A+ by any means. Let's go to the daily. So first of all, it's a Chinese ticker, always a bit sketchy. Here's its day 1, done good volume, 114 million volume. Nice run, I think it closed up about 100%. I do still want to see like a stronger day 1, but you know, that's fine. And then a nice drop in volume on day 2. And then looking to potentially play it for a surge on day 3. So the reasons why this wasn't top on my list, I was kind of just quite patient to see how it evolved and if I wanted to take it or not, was because A, as I said, it's Chinese. B, it's had this big run here, which was a big kind of red flag for me. When you're up against this much volume here, it's not a good sign really. So that was in my mind. Also, let's go across to the intraday. So this is the daily chart, pull back here, and then kind of looking at it pre-market on this day. So it's hovering above the previous day's close, or chopping around that area. You can see here. So I'm not taking anything here, and I'm still not even sure I want to take it, because when I saw it push above red-green, the spread was large, and I was thinking that is absolute no-go for me, because I've done that recently, and it's just like absolute no, I'm not doing it. So didn't take it because of that and the other reasons that I've mentioned. And then it had this spike here, about 65 to 90. cents. So I think that's about 30% spike there. So when I saw that, yeah, it can be an indication that this might come back down and do its proper move. But once it's done that, it's kind of like, I don't want to trade that, especially when the spread was still so large. So it came back down, hovered around that red-green area, respected it, and could have been a nice entry here. Did consider it, but I thought there's more cons than pros to this trade for me, especially with the spread, especially with this spike and crack. Chinese, just, yeah, so many things didn't feel right about this. But saying that, it did respect the red-green area, then went on to push past the dollar, hit 105. A very quick trade there if you're going to take that, and then an absolute failure. So you can see here, it just cracks all the way down. So yeah, you could have taken a quick, nice percentage gain, but that's not a true third day surge for me. That's yeah, I don't know what that is, but that classic Chinese third day surge, I guess. Just a quick smash and grab. So yeah, I'm actually really pleased that I didn't take this trade, even though, yeah, you could have made money on it, but I'm happy with my discipline of it not meeting the optimum criteria. And it does mean you are going to miss a few, but that's okay. So the market has definitely shifted this week. It's been a lot quieter than previous weeks, and I haven't traded as much. I've had more discipline because of this, which I'm happy with. So a couple of things I've put into place recently are that I no longer trade before 6 a.m. US time. This is a massive relief because it's just not sustainable being at a screen all day, and also I do want to see how pre-market sets up, see what the liquidity is like before I consider taking a trade. And I've also really been developing my hard rules and being more choosy about the setups that I take, even if they fall within my parameters. If they're not hitting the majority of my criteria, then I'm going to sit back, and it doesn't mean I'll miss a few, but I think it's going to make me better for being more strict with what I need to see before I enter a trade. And I think a couple of things that can help you develop hard rules are A, making mistakes. It's part of the game. Unless you make mistakes, you don't really know what to do and what not to do. And also tracking data. The more data you track, the more criteria you have to see what's optimum to take a setup. So I'm really happy with that. I think it's making me a much more disciplined and professional trader, and just takes some of the guesswork out of my hands. This year I've seen how A+ setups can present themselves, and you just know it's the right trade to take. So my patience is high at the moment, just watching the market closely, waiting for a killer setup to present itself. Also this year I've definitely shifted away from first green day bounces. It is my favourite setup, but the fact is it's just not in play that much at the moment. And I've adapted, and I'm seeing how I can trade other things, which is quite exciting. So just going to continue on that, move with the flow at the market, just be patient, watch, try and get a grasp on what is in play that week or that day. So cheers for watching, and catch you next Sunday.